Hi, Spencer here, and today I'm going to share with you the complete strategy guide to trading the double top and double bottom chart pattern. Now, this is one of the most important reversal patterns that you'll be seeing on your chart. So it's very important to know how to identify and to trade this pattern. So what you will learn in this short video tutorial, the key characteristics and the psychology behind the pattern, common textbook mistakes that retail traders tend to make, and also the effective trading strategies. I will share 3 strategies on how you can trade and profit from this pattern, and the little known but powerful tricks that professionals use, right? Little techniques that they use to get into to be able to use this pattern to derive some useful insights to trading. Okay, so in my earlier video, I talked about all the different types of chart patterns out there, and today we are going to cover the first of the reversal patterns. All right, the rest of the patterns I will cover in different videos. Okay, but today we are going to cover the double bottom and the double top pattern. Okay, so what is this pattern? Okay, so the most obvious way to see it is to look at it as like a M shape and a W shape, right? So the double top is a pattern that reverses an uptrend. So you will see something like an uptrend, right? And then you see a double top, right? Which is an M shape, right? Which then changes the trend to a downtrend. Okay, so what you're looking for is this double top pattern over here, right? And for a downtrend, right, you will see a W shape pattern that reverses the trend upwards, right? So this is the W shape pattern over here. Okay, so occasionally you get a variation where you get a multiple tops and bottoms, right? So for example, instead of just seeing one M shape, right, you might see something like triple, right? And you might for the W you might see multiple bottoms, right? So this gives rise to the triple bottom as well as the triple top. Okay, but I'll say the more common variation is the double top and the double bottom. Okay, so just to get a quick look, right, this is how a double bottom looks like. You can, on the bigger picture, you can see that it leads to a reversal of a downtrend to an uptrend, whereas a double top will reverse a uptrend to a downtrend. Okay, so what is the psychology behind this pattern? Okay, so the reason why this pattern reverses or changes the trend is because if you recall in when we study trends, right, in an uptrend you get a series of higher highs and higher lows, right? You get this zigzag pattern over here, right? Higher highs and higher lows, and in a downtrend you get a series of lower highs and lower lows, right? Which is this reverse also zigzag pattern but downwards, right? So this is upwards. So when you get a double top, right, essentially what is happening is that prices are unable to make a new high, right? So it's sort of the sellers start to step in, the bears, right, start to sell, and it leads to prices being unable to make new highs. Therefore the sellers come in more aggressively, push the prices down, which then eventually leads to a change in the trend, right? So from a higher high and higher low, you get lower highs and lower lows, right? If you're not sure what the higher high and higher lows are, that you can go and check out the video on swing counts. All right, there's another video on that which explains it in greater detail. So for this, for the lower highs and lower lows, which is a downtrend, right, what happens is that the prices are unable to go any lower, right? Because the buyers start to come in, right, and to start pushing prices up, right? So therefore, it leads to a change in the direction of the trend. right? So that is the key psychology, the idea behind the double top and the double bottom. Okay, so what is some of the common mistakes that traders make? The first common mistake is that people tend to assume that the trend reverses too early, right? So what do I mean by that? Right, so typically a trend is something that is very strong, right, and it lasts a long time. So if you are trying to look for reversals when at the early stage of a trend, right, when the trend has just started, chances are you will be finding false reversals, right? It will be just fake patterns, right? Because a trend only reverses when it has gone on for sufficiently long, right? The whole trend has played out. Then you start to see it starting to reverse, right? And also if they so for example, right, when the trend at the early stages, you might start seeing small false patterns, right? Like maybe a mini, double top here, right? But it's probably a false pattern, right? That that's not confirmed, right? And prices will continue, right, to go up, to go up, right? So this will be a false pattern, right? And also because if the pattern is too small, right, relative to the size of a trend, right, it's not going to be able to reverse the trend, right? So you need to see what is the size of the overall trend, right? If this trend is so big, right, chances are you need a bigger pattern, right? Maybe something like that, right, which will then have enough power to change, right, the direction of the trend. Okay, so that's a very common mistake, right? Spotting small patterns, right? Small patterns lead to small reversals, right? So you can have like minor reversals, right? That's something a bit more advanced, right? But you can have minor reversals. Probably there are reversals on a smaller time frame, but if you want to reverse the bigger time frame, you need to look for larger patterns, right? So not just the width of the pattern, right? And also the duration of the pattern, right? Though these two things, right, need to be taken into consideration. Okay, so if you enter the trade, right, too early, right, you tend, if for example, if you try to enter a trade over here, right, the risk that you are taking, right, is this whole big, if you place your stop loss here, right, and you place your entry here, right, so stop loss is SL, entry EP is for entry price, right, your loss, your risk, right, is this whole length over here, right, which is definitely too wide, right? So if you want to trade the pattern, you need to look for opportunities where you can enter with lower risk. Okay, so I'm going to share with you 3 simple strategies that you can use to trade the pattern. Okay, so the first strategy is what I call the early entry. Okay, so this is somewhat of a slightly more high risk strategy, right? Because you are going to enter early. So for example, right, when you see, say, a double top, okay, so I'm using the example of a double top, but it works just as well for a double bottom as well. Okay, so when you see, right, something like that, right, a potential double top, okay, and the pattern is big enough, okay, so just ignore this, right, and the pattern is big enough, right, the first entry that you can make is to try to get an entry as close as possible to the prior high, right? Of course, this is a slightly riskier entry because at this point of time you are not sure that the price will actually go down. Okay, so let me just clear this up a bit. Okay, so what you're looking for at this point of time, right, when the second leg has not formed yet, right, and you are taking the early entry. Okay, so if you are taking this entry here, right, you can place a stop loss. So you need to estimate, right, a buffer, okay, to place your stop loss, right? And the reason for this entry is that the reward to risk is good because the potential move is a lot, right, versus the risk that you are taking, right? So this is one way to enter the trade on a lower risk, right? But if you enter here, you need to make sure that the setup is a really good setup, right? Meaning you want to have a lot of strong bearishness on this move, right? And a lot of a weak recovery on this move, right? So that the chance of it reversing is a lot higher than the chance of it continuing to go up, right? So that's your early entry, your first potential setup. The second trading strategy is to wait for the neckline. Okay, so you can draw this neckline over here, right? And wait for the price to break the neckline. Okay, so the general textbook way of trading is to teach you to trade only when this neckline is broken. So if you wait for the neckline to get broken, where exactly are you going to place your stop loss? Right. So one of the techniques you can wait is to look for a small consolidation prior to breaking the neckline. Right. So if you have a small consolidation like this, you can then enter when it breaks here, right? And then you can place your stop loss above, right, this small consolidation, right? So therefore your risk is going to be a lot smaller, right, than placing your stop loss all the way at the top. Okay, so this is your second opportunity to enter the trade. And the third opportunity is to wait for it to break out and wait for the pullback. Okay, so most of the time after the break of the pattern, you will see a pullback, right? The pullback may reach the neckline or it may not reach the neckline, right? Depending on how strong. But the first pullback is usually a great opportunity for you to enter before it continues the trend, right? So this is the third opportunity for you to enter. So these are three simple trading strategies that you can use, and they're really high probability trading strategies, especially number 2 and number 3. Now we're going to look at the example of a real chart, right, to see how this applies. Okay, so this is clearly the double bottom, right? The early entry, right, that you can take would probably be somewhere, right, in this region. Okay, generally making your entry anywhere in this region, right, would be a good idea, right? Because you can place your stop loss, right, just beyond here. Okay, so if you were to make an entry, let's say your entry over here, you can then place your stop loss, right, over here. Okay, and your target, right, you can then place it, maybe somewhere around here, right? So your potential reward, right, is a lot compared to the small risk that you are taking. Okay, if you miss the entry, right, the next opportunity for you to enter would be here, right, just before the breakout. So you notice just before the breakout, there is a small consolidation over here, right? So you can then enter around here, right, and place your stop loss just beyond this small box, right? So your risk is going to be this small area, and your target, right, can still be the same target. Okay, and the third final entry will be at this pullback over here. You can use this pullback to enter, right, and you place your stop loss just somewhere around here, right, using this small pattern. Okay, so these are the three opportunities for you to trade the head and shoulders pattern. Okay, so I'm going to share some bonus tips, right? So some professional tips that you can use to enhance the pattern. Okay, so the first tip, right, is that you want to make sure that the trend is in the late stage, right? If the trend is too early, right, you will most likely not be a reversal. It will most likely be a false reversal, right? So for example, in the same example, if you notice there's like something here that looks like a small double top, right? But it is actually not a double top, right? Because this pattern is too small, right? And the uptrend is still in the early stage, right? So you will not want to trade this as a double top. Okay, next, you can use the pattern for price target projection. Okay, so this is something quite interesting. Okay, so if you look at the height of the pattern, so usually it will take the lowest point, right, which is down here, to the neckline, and you duplicate this, you can get a potential price projection, right? So this will be a good target, right, for your double bottom, right? So the same way, if it's a double top, right, you can use the same price measurement technique to get a price target. Okay, and the last tip, right, is that the price has a tendency to overshoot the prior high or low, right? So for example, sometimes, right, this can happen. Okay, so instead of getting a perfect double top, sometimes what happens is that the price slightly exceeds and then it goes down, right? So sometimes you can watch out for this area, because when it has a false breakout and it goes back down, this could be, right, a very good entry opportunity as well. Okay, so because if you follow the textbook, right, most of the time they will show you an exact exact double top, right, or in this case an exact double bottom, right? But in reality, quite often you will see a slight overshoot. Okay, so this is something that's a bit more advanced, but if you look at more charts, right, you will understand what I'm talking about. Okay, so this false breakout, and when it goes back in, it is an potential opportunity to trade the setup as well. Okay, so that's it for the bonus tips. Okay, so I hope you have learned a lot during this video tutorial, right? If you have any questions, feel free to post them in the comments or drop me an email. And for more videos and market analysis, please visit us at www.synapsetrading.com. And I will see you in the next video.